Good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah. With me is my colleague Ankita. And well, this is a show where we are going to be taking you through all the top buzzers and newsmakers in today's trading session. And within a minute, we're going to be telling you why each of these stocks is in focus. While we do that, let's also welcome on show our technical expert for the day. We have Mr. Ajit Mishra, the SVP at Research at Religare Broking, joining us on the show. So, Ajit, hi, good afternoon, and welcome to the show. Before we come to you for your technical take, Ankita, talk to us about NCC. Lots of news around this stock today.
Yes, absolutely. NCC is in focus because NCC's arm has received an order of debarment from NHAI. The company has been barred from participating in any tender or bids by NHAI for the next 2 years. Well, the company said it is reviewing the order and will take appropriate steps in accordance with the applicable law. It also clarified that the debarment will have no impact on its existing order book or the ongoing projects. In the back of this negative news piece, NCC is in focus, though it has turned absolutely flat, still in the red, trading with cuts of 0.03%.
Okay, so that's on NCC and negative news, and that's what the stock is reflecting as well. But Ajit, you've picked out a pharma name for us, Biocon. Now, while today a lot of other pharma stocks are in focus, talk to us about Biocon and how this stock is shaping up on the chart.
Yeah, good afternoon, Snehi. Good afternoon, Ankita. So what we are seeing today is that after this 3 days of rebound, markets are witnessing pressure at the higher end. We were anticipating that this recovery might extend, but the way market has declined with the marginal dip in the banking, that clearly shows that the kind of consolidation that we are seeing in the market is likely to continue. So where defensives comes into the picture, so like pharma names, Biocon, after this recent consolidation, around long-term averages is set for a recovery now. So here, not only Biocon but the entire pharma space, excluding a couple of names, are positioned well for a recovery. So for Biocon, 375 is what we are eyeing as the immediate support. So that should be the stop loss, and gradually it can inch toward 405, 410.
All right, so that's the word coming in as far as Biocon's chart is concerned. But Snehi, you've picked out Jindal Saw for us. Tell us what's the news flow here.
So, Ankita, like NCC, lots of negative news surrounding Jindal Saw since morning as well. The stock is under selling pressure following an audit conducted by the American Petroleum Institute, that's API. Certain non-conformities were identified in the process, leading to the issuance of a suspension notice that prohibits the company from using the API monogram on its seamless pipes. The company is engaging with the API and implementing necessary corrective actions to resolve the identified NCs, and the financial impact is expected to be limited as the seamless pipe production capacity is interchangeable and has been redirected towards other product lines according to the company. So that is what the company has to say. But yes, negative news flow coming in for Jindal Saw, and the stock is under pressure, has been for the course of the day, and right now also lower by 3.5%.
All right, Jindal Saw lower by 3.5% on the back of the news flow. But let's move on to a gainer in trade, that's Cochin Shipyard. A positive news flow coming in. It has signed a formal mega contract for more than 2,000 crore rupees with France-based CMA CGM for the design and construction of 6 1,700 TEU LNG-fueled feeder container vessels. And on the back of this big order win, Cochin Shipyard is in focus, though it has given up all those morning gains. It's hovering around the day's lowest point, nonetheless holding out with a shaded screen with an uptick of 2.10%.
Okay, so that's on Cochin Shipyard. But Ajit, once again coming to you, and you've yet again picked out another pharma name for us. It's Glenmark that you've picked out for us. Last 1 year, the stock is up by 50%. Rather than that, YTD, last 6 months, last 1 month, the stock has done absolutely nothing. What is your take on the charts when it comes to Glenmark?
What we are seeing, that some of these stocks which were sitting on the sidelines after very strong moves, be it Glenmark and Pharma, Lupin, they all are now indicating possibility of trend resumption. However, the move is going to be gradual, so one should not get carried away with the recent upbeat move. So one should rather focus on short-term bets. So even at current levels, we feel that the upside close to around 2140, 2150 is likely in the near future. So with stop at 1980, one can still go long in Glenmark at current levels.
Okay, so go long on Glenmark is the call coming in from Ajit. But let's shift focus and talk about Pace DG Tech. The stock is in focus after its material subsidiary Lineage Power Private Limited received a purchase order worth $1.35 million from Saudi Arabia-based Yakin Chem. The order is for the supply of 4 mobile battery energy storage systems, that's BESS, mounted on gooseneck trailers. The delivery of the order is set to be completed by April of this year. So order win coming in for PSG Tech. It's a positive news flow, and the stock held on to some amount of gains in the first half of the trading day, but has slightly slipped towards the red right now, 0.2% lower.
All right, moving on to the next counter that is in focus, MCX, that was up almost 3% in the trading session. MCX and NSE Clearing have removed additional margins on gold and silver futures effective from today, and the 3% extra margin on gold and 7% additional margin on silver that was previously imposed on February 4th to manage high volatility has now been withdrawn. Now, this normalization now follows sharp price corrections in both the metals. On the back of that, MCX still holding on to gains of 2%.
Okay, so that's on MCX. The other stock in focus is Dixon. Ajit, you've picked out that stock as well. Before we get your technical check on that, on the fundamentals today, there is a CLSA downgrade coming in on Dixon Tech, wherein they've downgraded the stock to a hold rating from outperform. The target price has also been cut to 12,100 from 15,800. Ajit, while of course this is one brokerage's view, talk to us about how you are viewing this stock on the chart.
Right. So, in fact, we were seeing that after this long corrective phase, the stock attempted a recovery or rebound attempt of late, and it was trading a very narrow band while holding up the 20 EMA mark. But today it surrendered that level, so that indicates a possibility of a gap that we have on the daily chart to be refilled. And it's not a major decline that we are eyeing. So basically, close from 10,500, 400 is something that the stock might retest before making any attempt of further consolidation or recovery. So yes, in case if you have any existing short-term positions, you may consider booking profits at current levels and wait for any dip towards, let's say, 10,400, 500 mark to re-enter.
Okay, so that's on Dixon, and that's the strategy one should be looking at if you want to be entering Dixon right now. But shifting focus, and let's keep it going with Pharma. Like I said, lots of announcements on that front today. Zydus Life is in focus after the company received final approval from the US FDA for its bosentan tablets. Now, these tablets for oral suspension are indicated for the use of pulmonary arterial hypertension, particularly to improve exercise ability and reduce clinical worsening in children aged 3 years or older. The other reason why the stock is in focus is because the pharma company has also announced the launch of its biosimilar aflibercept, Anira, for eye-related issues. So, two reasons why the stock is in focus. Both are positive, but yes, Zydus Life is also given into the market pressure slightly, is lower by 0.1% as we speak.
All right, that's Zydus Life and focus on the back of that news flow. But let's move on to a set of counters that are in focus. The power companies like Tata Power, NTPC, Coal India, because exclusive sources are suggesting that the Power Ministry is set to provide major relief to mega power projects. The government is likely to extend 100% benefits under the mega power policy to provision mega power projects, including full exemption from customs and excise duties on projects, equipment, and more. So on the back of that, these power companies are in focus, though they're mirroring the market right now. Tata Power is trading towards the lowest point of the day with cuts of 2%.
Okay, so that impact of the market is getting to Tata Power as well. But Ajit, you've picked out DLF, a sharp pivot to the real estate space. Now, this is one of the top losing sectors today. It's not done well in the recent past as well. And in fact, DLF too is lower by about 20% in the last 6 months. Is it a good time to enter the stock right now?
So not really. In fact, if the view is short term, one can consider going short, even at current levels after this decline. Considering the kind of attempts that the stock had made in the recent past, have failed to positively surprise the market. Means there were multiple attempts to reclaim the short term averages, but every time we cross this hurdle, again we see that the selling pressure re-emerges. So after this, recent phase of consolidation in a very tight range, again the stock has formed a fresh shorting pivot, so which may result in further decline towards 600 to 590 area. So even at current levels, with a stop at 640, one can consider going short in case if somebody is planning any short trade in the markets.
Okay, so that's a short call coming in on DLF. Viewers, make note of that. But shifting focus and talking about Pine Labs, we've got this news flow in the middle of the day today, a few hours ago, that the merchant company, that's Pine Labs, is integrating OpenAI's artificial intelligence models directly into its core systems to autonomously optimize the workflows behind transactions. The architecture would allow AI agents to autonomously navigate complex financial tasks, such as negotiating supplier terms, optimizing cross-border settlement cycles, and managing recurring bill payments within predefined user guardrails, the company said in a statement. Now, OpenAI will provide decision-making capabilities, while Pine Labs payment rails will handle transaction execution and regulatory compliance. So this is what the partnership is going to look like. Positive news for Pine Labs, doing very well. So a little bit of a dip, but is back at the day's highest point right now, 2.6% higher as we speak.
All right, that's Pine Labs in focus. But let's talk about Cipla. Ajit, tell us why we picked out Cipla on the chart. I mean, if you look at Cipla, it has been in a corrective phase. From here on, what are the levels to watch out for?
Exactly. So, at one end, we are seeing that majority of the pharma names, they are doing well. But Cipla, on the other hand, has failed to please, in case of any rebound that we are seeing or the overall buoyancy in the market as well. So the stock is still holding below its short-term averages, and the kind of chart pattern that we have possibly indicates a fresh breakdown in the near future. So even at current levels, one can go for a short position with 1360 as a stop loss and positionally close to around 12.
Today, Ajit has picked out most of his stocks from the pharma pack. Ajit, on that note, we'll let you go. Thanks so much for your time and for sharing your outlook on a bunch of these stocks. Thanks so much. Okay, viewers, with that, let's just zoom